You have told us all the stories from 2024.
Saving is a losing game.
They're expecting to see the rate cut come down to about 2.75.
That's going to likely spark the economy.
A lot of opportunities to be explored in 2025.
I, for one, am very, very excited about what's happening in 2025.
Welcome to the Stellar Talk Show. It's your platform powered by Experts Insights.
Hi, and I'm your host, Stella Ram. You have told us all the stories from 2024, what you have experienced, the obstacles, the challenges, and the financial difficulties you had. And you were skeptical about 2025, but today we are joining with Martin Keuv, who's an investor, broker of record at Keller Legacies, and also the co-founder at Vaughan Investors Club to break it down and what to expect in 2025. Welcome to the show.
Thanks for having me, Stella.
You're most welcome. So before we dive deep into today's topics, Martin, why don't you tell us a little bit about yourself and where it all started?
Sure. I'm going to go way back a little bit. I started out not even being an investor at all. I followed exactly what the government told me I should do and basically go to school, get a job, buy a house, pay off that house, and live debt-free. And I lived in the corporate world for a good almost 20 years.
Wow.
And then real estate was a light bulb that went off for me. And it went on a kind of a 3 or 4 year period there where I just was a sponge and absorbed as much as I could, which led to me eventually transitioning from the corporate world out into the real estate world.
Nice.
A very scary thing, obviously, when you're doing it up front. But if you do it calculated and you have the information behind you, then you're taking action with information rather than just coming out and doing something. So I transitioned out into the corporate world. I started from the corporate world into the real estate world and basically started out on my own. And like anybody else that just starts out in real estate, I basically refinanced my home, went out, bought several properties, and tested the model myself.
Amazing.
And bought single-family homes, converted them to duplexes. And if I fast forward a few years after that, eventually getting into multifamily investing, working with investors, so starting out with individual investors, then getting a pool of investors and raising funds for much, much larger assets.
That's amazing.
And then that led into helping someone else start this brokerage as well. And then I've had a number of investment clubs, but the one we have right now is the Vaughan Investors Club, which we have here. And it's not just real estate. We focus on what other avenues do you have to build wealth. Because for us, it's all about building wealth and living life. That's the slogan of our investor club. And it's essentially those two things need to be equal. It can't be just about, I want to make as much money as I can. And on the other side, you need funds to enjoy the lifestyle that you want. So you want to live life on your own terms. And to afford that, you need both. You need to be able to build your wealth, not just your short-term wealth, but your long-term wealth, and then living your life however you want. And that could be you and your family. For me, it happens to be my family, happens to be traveling. It could be something different for somebody else.
That's very inspiring, and that's definitely true. It's always true to say, when you earn that money, you need to make your money work for you as well, which is exactly what you were doing. And taking that first step, you mentioned it was scary. Definitely, it's a scary step to take, but once you do take that and pass that stage, it's a world of opportunities that you explore.
Correct, and I was afraid. I was asked to go back to the corporate world, and I haven't looked back since.
I'm glad that you didn't. So let's talk about today's topics a little bit. So 2024 was a very eventful year. We saw a lot of fluctuations when it comes to different topics. Let's talk about economic trends and inflation first. Your insights into that.
Sure. I don't think it's just 2024. We've been on this roller coaster probably since we came out of the pandemic.
That's true.
And it's unprecedented right now. We've had times in history where we had pandemics, but the world closures that we experienced, the pent-up demand that people were kind of collecting their funds, and then when we came out of the pandemic or all those lockdowns, spending went on a high for everybody.
That's
true.
True.
A lot more disposable income, and that's when you saw inflation go up. And so basically inflation went up, and in return, what does the government do? They raise rates. So basically you have that monetary and fiscal policy of what the government does, and they raise rates and reduce rates depending on what inflation is. Historically, our interest rates are typically lower than what you have with than inflation.
That's true.
Interest rates should be lower. That happens for us, and it happens for the government. And if I want to go a little bit deeper in terms of the government has a very, very large deficit. The last 2 years, or probably 2023 till now, the interest rate has been higher than the inflation rate. Now that is okay in the short term, but not sustainable for the government in the long term. It's the same thing as me going out and investing or borrowing for me to invest. So let's say I borrow at 5%, I go invest and I only make 2%. Then I'm losing 3% every single year. And that's exactly what's happening to the government right now, with the inflation rate much, much lower than the interest rate. So there is going to be likely in 2025, if I foreshadow, likely more rate cuts if this is in the cards. And if GDP continues to be low, they need to spark the economy.
Yes.
And the hard part is the housing market has been that backbone for several years now.
Yes, it has always been.
They don't want to increase that demand too much. So they're in this little conundrum. But interest rates have been a roller coaster. Inflation has been a roller coaster.
Yeah.
The good thing, and I know I don't have a crystal ball, but I think we have potentially hit the bottom.
Yeah.
And we are starting to come out of that.
Yes.
We haven't had a recession.
Yeah.
We have had interest rates now starting to come down. The economic indicators are kind of coming into check. So inflation is still low now. It's actually at a good spot where the government wants it to be.
Yeah.
And now with interest rates starting to drop, I'm an investor at heart, we're starting to see opportunity. There's a lot more opportunity. And that's what makes me very, very bullish for 2025 in terms of what opportunities can you see, not just as an investor, but as someone purchasing your first home, or someone just going out into the market for the first time.
That's true. That's true. And just to touch on the economic growth that we are seeing right now, it's a good starting point for 2025, in other words. And also the inflation, as you mentioned, has gone down below what it was expected to be. It's 1.9 right now, if I'm not wrong.
It just went up to 2 again.
Oh, it did?
Yeah,
okay, there you go.
But it's still, it's where the government wants it to be, essentially.
Exactly. So a lot of, as you mentioned, a lot of opportunities to be explored in 2025. Yeah. So let's also touch base on the population growth and the housing demand that we saw in 2024.
Sure, a lot of discussion around that in the government as well.
Yeah.
And population growth is one of the key metrics we look at. And as an investor, I look at long-term or short-term. So the short-term ones are things that can change on a monthly basis. Your interest rate, your GDP, your inflation, all of those things can change month in, month out. So I look at those in terms of the long-term trends. However, population growth has been with us for quite a while.
Yes.
And again, it's the backbone is what the government uses in terms of getting that economic growth. Because people come into the country, the government can issue debt, you can increase spending overall.
That's true.
So that population growth has been with us for a while, and Trump is now in power, and he mentioned something, and in reciprocal, we mentioned the same thing in terms of, hey, we need to cut that back. And it's true, we probably do need to cut that back. We need to cut that back because people aren't able to have homes.
That's true.
We're focusing on rent control, we probably should be focusing on supply. So that population growth has been increasing for quite a while. They have been talking now about settling it back, but if they settle it back, I wouldn't say the damage is already done, but those indicators and what's already in place is not going to be going away for a long time. So we still have a supply problem.
That's true.
The supply problem is not going away. Unfortunately, and I can get my government hat on, is when they focus on rent control, they're focusing on, unfortunately, votes and immediate demand rather than how do we fix this for the long term. And that's going to be supply.
Yes.
And we need to have people building
more homes
for rent and for resale. Resale, we've been doing quite a good job. We haven't been building permanent rental structures for quite a while.
That's true.
We had it last couple of years there, we built it, but it's all been condo building for I'd say 20 years or so, just putting it out there for resale rather than rentals. And we do need rentals out there. If we look at Toronto and where Toronto is on its growth and its life cycle, it's still growing up. But we're not where New York is, we're not where Singapore is, the other world cities, but we are going in that direction. That direction is essentially a rent direction, where people can't afford homes. They need to rent, and that's likely going to be the future generations, is they won't be able to afford homes, hence they're going to be renting.
That is absolutely true. And when you talk about that rental, opportunity in building rental properties, that is a very good aspect to focus on, as you mentioned, because a lot of people during the pandemic, they actually sold their homes in the GTA and they moved out because of the remote work environment they had. But after the pandemic was, all came to an end, the companies that the big corporations, they want the employees to come back to work, so they had to sell their homes outside the GTA and come back and either repurchase or rent in the GTA. And in the meantime, the immigration numbers went high. It was more than what the Canadian immigration was expecting.
Much more.
Exactly. So the demand was so high. Like I was looking at an article by TD Economics. They mentioned that from 2024 to 2026, they are expecting to have like a demand delay or like a crisis over 300,000 homes in the GTA, which is absolutely what we are seeing right now.
And that is likely going to grow. Because housing starts are not matching the amount of people coming in.
That's true.
So it's very difficult. That stat is likely going to increase. And that lack of supply, that's why as an investor, I look at the next 10 years out. And that lack of supply is not going anywhere, at least for the next decade or so.
That's
we need to build homes.
Yeah.
And we're just not building it fast enough. And even if they come out and start putting a pressure on that, it's not going to be enough.
No, I understand. I agree with you on that. So there's a lot of things to focus on. Hopefully 2025 will be that year that a lot of these questions are going to get answers for, right? Let's also talk about the big conversations that we had in 2024. Every gathering did not end without talking about interest rates, right? We saw it go high, and we saw the last 5 times it came down consecutively, and now it's at 3.25. So what are your input in the trend that you saw in 2024, and what are we expected to see in 2025?
Sure. So we've been on a roller coaster for sure. The last time we faced that was 2017. In 2017, we had the Ontario Fair Housing Plan, we had the stress test come in, and we had interest rates go up. I think it went up several times, and then they came down afterwards. I'm a long-term investor. So if I look at average home prices, I look at what's been happening for the last several decades. And 2017 did not do a blip. Stress test is still in there. Ontario Fair Housing Plan is still in there. Interest rates went up, interest rates came down. The trend continued exactly where it is today. So I look at long term and I go, we've been on this roller coaster for the last several years. I expect it likely to revert back to what that long term is. And that's essentially just following the same trend. If I look at the last 2 years specifically in terms of interest rates going up and down, the economy and the people they don't know what to expect. It's been unprecedented for them.
Yes.
So when it went up, obviously people start clamping down. We see home prices drop. Now it's starting to open up. The first 4 rate cuts that we had didn't really do too much to average home prices.
No.
The market, we didn't feel it. We didn't feel that spark demand yet.
Yes.
But now we've had 2 aggressive rate cuts over the last 2 periods, that September and December. We expect that to likely spark the economy. We have seen that in the last 2 months. So I do expect 2025 to start strong. Whether it remains, we'll see. It's still that pent-up demand. It is there, but how much is it going to be there in the long term? I'm not sure.
Yeah.
But I still do expect that these last rate cuts and further expected rate cuts in 2025 are going to start fueling that market. You're going to start to see the home prices go up and probably go on that same trend. And then if I start to put in the government, money supply and all of that, it still makes me very short-term cautious, long-term optimistic on real estate. And I've always had that view. And I think this could be the start of the next year to 2 years of being very good opportunities for investors or someone just starting out in the market.
That's absolutely right. I completely agree with you on that. And just to say, it's like a scale, in other words, that we say every time the interest rate drops, the housing prices, they rise.
Typically.
Yeah, and then the interest rates go up, the housing prices drop. So right now we are in a good pocket, in other words. Like we don't see the rise as much as, it should be. So if anybody is on the edge, thinking about maybe taking that first step, this will be an ideal time to have those conversations.
That's a very good point. Yeah. And in terms, I don't time the market. They're saying in real estate, you don't want to time the market.
Yeah.
It's you want to have your time in the market. However, right now we've had these interest rates go up and down.
Yeah.
So with the interest rates come down that drastic, the home prices have a delayed effect. They don't happen at exactly the same time.
Yes.
So basically interest rates drop and you may have several months of delay before home prices actually start to shoot up.
Yeah.
That's the opportunity right now that we're seeing. And it is probably a very small window because the drastic drop that we've had.
Yeah.
If we do see that pent-up demand start to come out over the next several months, it may be a little bit sharper in terms of the home prices going up. So that window right now is looking really, really good.
Really, really good.
We say it in our investor club, it's like these upcoming months, not that a year from now is not going to be a good time to buy. It just may be a more advantageous time to buy right now because you haven't experienced that growth because of the interest rates coming down yet.
That's true. And also, I noticed the Bank of Canada was saying, like, according to the private sector economists, they're expecting to see the rate cut come down to like about 2.75 by mid next year. So that's a good number to be at. So if you're trending towards that, and if we are in that declining climate of interest rates, it's a good time to explore opportunities and options.
Agreed. We had our interest rate went up to 5%, Bank of Canada overnight rate. Now at 2.75, that's almost half.
Yeah.
In the span of a year and a half.
That's
and
true.
That's going to likely spark the economy. But jury's still out on that. We'll have to see.
We have to wait and see, most definitely. So a lot of interesting things happen in 2024 and a lot to look forward for 2025. I want to touch base on some of the key changes that happened in the industry from the beginning. We saw, like, earlier this year, I believe in March or April, the 10-day cooling off period, which was initially introduced to the condo market for new pre-construction, was extended to freehold. Just, giving that extra strength for anybody who's, getting into the pre-construction freehold stage. And then we saw on December 15th, we saw the boldest mortgage reforms coming into effect, making it much accessible and easy at reach for any generation when it comes to buying a home. We also saw the stress test was taken off, which was a great thing when you're actually rate shopping, going around looking at your mortgage options, because we have a lot of mortgage renewals coming up as well in the upcoming months. And with that, I want to also touch on the opportunities that was introduced when you're thinking of building that second unit. If you're a homeowner, do you want to touch base on that for a bit?
Sure, lots in there, by the way. So if you're looking specifically, I won't go into all the mortgage changes that happened. However, in a nutshell, it's making it easier for people to do things. If the 10-day cooling off period comes in, you're not under stress. You're not under stress. You have the ability to get out. So you may make that purchase and over that 10 days realize it is a good purchase, or hey, I'm not ready yet.
Yes.
The other things that came in specifically around the secondary suite, or having access to debt and access to funds and access to capital is one of the big things as an investor or a first-time home buyer.
Yes.
It's basically how people make decisions is what's that debt look like for me on a month-to-month basis. So making it easier for you to get debt, for example, that threshold from $1 million to $1.5 million makes it easy for you to borrow on higher priced assets, where in the past it wasn't. And it's making it a lot easier for us to build secondary suites. When I first started out, getting a secondary suite on a property was pulling teeth. It was very, very difficult. We had that in place from a provincial standpoint. Municipalities still weren't around.
Yes.
And it came around to basically, I want people to be happy and healthy, and I want to get my votes in the municipality, rather than what's the long-term need there. And now you've seen over the last decade or so, from one suite to two suites to 3 suites, and now in many municipalities, you can put up to 4 suites on there.
Yeah.
And that's basically not by the fact that the municipalities want to do it. They have no choice. They need to do it.
Yes.
And that comes back to population growth. And it comes back to increase in demand. And we don't have enough supply. So they're trying to get what levers do I have to increase supply? One of those is let's put more suites on there. And they're making it a lot easier for people to purchase and put secondary suites on there and also borrow against that.
Yes.
Put those in.
Yeah.
So to build those secondary suites, as well as get mortgages on the entire unit. So now you have 2 units rather than 1. So there's quite a lot in terms of that's that spark that they want to put. And if that sparks the market, great, and they want to do that. However, what I was saying before is they don't want to spark it too quickly as well. So they're in that conundrum. So they want to spark it, and it has been the backbone, but too quick is not good as well, because what happens when we start to increase homes and the government starts to spend money, inflation starts to come back. That's the problem. And you get back on this fiscal and monetary policy of governments raising rates and lowering rates and raising rates and lowering rates, and it's very reactionary.
Yeah, it has to be a good balance, a healthy balance.
You want the balance, and you want basically. I come from the corporate world, and I'd rather have 2 years of growth, 2% growth every single year for the next 20 years, rather than 5% one year and 2% one year. It's number one, it's stressful. Number two, it's not predictable. So I'm an investor. I want something that's both projectable and predictable. And I can basically make those decisions because I have not a certainty of what's going to happen, but a high probability of what's going to happen. And when you have markets over the last 4 years that are kind of doing this, very difficult to predict.
That is true. Absolutely right. I just want to break it down to like anybody who's listening to this. What is a secondary unit is? So basically, if you're a homeowner and if you have that extra space, maybe like a basement or like you have like a big backyard, you want to build a separate unit which has a kitchen, a bathroom, and sleeping space like a bedroom with a separate entrance. That's pretty much the secondary unit is, which can definitely improve your income potential as well in today's real estate market because there's a high demand for rentals in the GTA, not only in GTA but anywhere across the country, but specifically GTA has a bigger population growth. So some of the opportunities that was introduced to that is they're doubling the loan amount. So it was previously 40,000, now they're doubling it to 80,000, which is coming into play, I believe, in early 2025. And also, they are giving you the opportunity to borrow from your equity up to 90%, and then having a lower interest rate to pay it back. And also having that cap for those units of up to $2 million. But, you know, more than me, you will know more about it. Do you want to touch base on those?
Sure.
Yeah.
They're good initiatives, but as an investor, they're still likely not enough to push forward.
Yeah.
$80,000, and these are construction loans. So it's basically for you to build that secondary suite. To put a coach house in the backyard, for example, is not $80,000. It's upwards of $300,000. To put a secondary suite in your basement could be $120, it could be $150, it could be $50, depending on
the size. Yeah.
So going back to what secondary suites were, is they started as granny suites or in-law suites, and people were basically utilizing these as potentially secondary income sources. The hard part for that is you can get more income, but now you're touching on the equity part of it, and you can borrow upwards of $2 million. So if you're doing that, you have the ability now to borrow much, much more. And as an investor, going back to that, it's all about redeploying your capital and having access to that capital. So if you can go back and get a secondary suite in there, you're doing two things. One is you're increasing your income. So basically your funding of your debt every single month makes it easier. You have your own mortgage to pay if you're living upstairs. Someone else is paying part of that mortgage. Overall, it's great for you. On the reciprocal end, you push the value of your home up. So when you push the value of your home up, you can go straight back to the bank and borrow against that. You increase your ability to get capital.
That's true.
And the bank is looking at that, and if they look at the basement unit and the upstairs unit, typically a bank looks at your personal income. On how much they're going to give you, as well as the home, and they appraise the home out. When that income is coming from a secondary source, now they're starting to view that. They never viewed that before. So they didn't view the secondary suite or the third suite as income, and they relied on the person's personal income coming in. And typically you had a ceiling, and that ceiling was much lower. So all we're doing right now is making that ceiling higher.
Yeah.
So we make the ceiling higher, it means more people can come in.
That's amazing. That's a good breakthrough. Hopefully that will cool down the demand that we have, hopefully. But you know, these are baby steps that we are taking. A lot to be done, but it's great steps that we are seeing the government is establishing there. So with saying that, when it comes to rentals and, you know, having these secondary units, there are a couple of things that comes to mind. First, like there are a lot of opportunity out there for rentals, but those needs to be legalized. Like when it comes to basement suites, we see that in, you know, many places in the GTA, you do have the basement suite, which was initially made as a part of your own dwelling, but now you want to rent it out, but you need to get a permit or you need to legalize it. So do you want to touch a little bit on that aspect, like, you know, how does that work and what to look for?
Sure. 90% of secondary units are still not legal. You know, it hasn't been legal. People are just basically trying to put them in there. And there's a couple of things on that in terms of negative. Negative is a safety concern, for one. Is it not following building code, electrical code, everything that you need to have a safe unit in there. But number two, it impacts your ability to further invest. And the bank is not going to loan to you. They're not going to see that income that you're getting on the secondary suite. They're going to rely on your personal income that we just talked about. So they're not going to loan to you as much as they would before. So you're trying to basically, I wouldn't say cut a corner, but you essentially are trying to cut a corner on one. But that cutting that corner is impacting you and impacting you in a negative way. You want that permit. You want that piece of paper that says it's a secondary suite. And now let's look at the positives. The positive, the reciprocal, what I just talked about, having more access to capital. You have someone that's going to verify and look at that income that's coming in, not relying on my own income coming in. And then what happens when I sell that property? If I have a legal secondary suite, the value of that property is pushed up. It's legal, someone else can physically touch it. You know, I can't come in there as an agent and say, this is a legal secondary unit because it's built to code. You need a piece of paper that says that. So it needs to be, that's the only way you can verify that, is what is that municipality documentation that says there's a legal secondary suite in here. The issue I come with new investors is everyone wants to cut a corner, everyone wants to save costs. I was that guy when I first started out. How low can I spend to get something done? And in the long term I found, and we call this, you know, spending dimes to save nickels type thing. And it's basically down the road, it does hurt you. It hurts you down the road in terms of, if you don't legalize a secondary suite, you don't have access to what I just talked about before. But you're also losing money in the process because it costs you, if you, let's say you have a secondary suite that is a blank canvas, you already have to build it in terms of having it to a safe unit. So let's just assume you're going to build it to code already, even though you're not going to go through the government permit process. Going through that permit process, the additional cost is not that expensive, maybe 5 to 7K.
That's true.
And if you look at 5 to 7K,
and what it does to your property value.
Correct. And I mirror that to what it does my property value, as well as the access to capital and the access to things that I have. It's a very small number to pay, whether I'm a residential homeowner or I'm an investor. So for everybody to go in there and say, I just want to cut that cost, you may be hurting yourself in the long run in terms of opportunities that you have.
That's true. So like what I would suggest to anybody who's considering using that extra space in their house as a secondary unit, maybe the basement, or building a secondary unit, talk to the professionals, get the best advice, you know, take the, you know, the permits and, you know, get it legalized. Because, you know, in the long run, as you mentioned, you're trying to, like, you know, nitpick and save a little bit of money right now, but it's in the long run, when you're looking at the whole property value of it, as you mentioned, it's a big number that you're going to miss out if you don't do the small things now.
Agreed. I wish I did that when I was younger. It's what the term is called, house hacking. So if you're just starting out, I'd always say to any new investor just starting out is, one, try to purchase a home.
Yes.
But number two is, how can you maintain that home? So there's two lenses you got to look at. One is, do I have enough down payment? Can I purchase this home? That could be some love money. It could be some, you know, parents helping you out. However the case may be, try to get your hands on a down payment that you can purchase the home. The second piece comes down to, how can I finance that home and get access to capital? If you have a secondary suite in there, it makes it a lot easier for you to not just access the capital, but ultimately anybody makes a home purchase, especially when they're first starting out. It's not the price of the home. It's not, they have the down payment. It comes down to how much can they spend on a monthly basis to service that mortgage. Typically, that's how people are making that decision. So if that decision can be made easier because I know I have a very predictable source of revenue coming in from the basement, then it means now I have access to capital and I can service that debt on a monthly basis much easier than I could without that secondary suite. So my personal out-of-pocket expenses are much, much lower because I have someone else really helping me out, and I can go much, much further. And in the process, I'm building equity in the long term. So it's really a positive thing for someone to do. I remember I had to convince my wife on this, is when we first met, we met and we had a condo. We had someone living here, 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 and here. And when you get your own home, a lot of the mentality is, well, this is my home. I don't want anyone living in my own home. And that's why we have building code in place, is that secondary unit is the same thing as someone being in a condo. They're completely separate. And they're making that in terms of parking, in terms of egress, in terms of your laundry capabilities, your entry, all that is completely separate. So even though it's your dwelling, utilize your dwelling, your largest asset, for a way for you to help yourself. But sometimes I even wouldn't call it a sacrifice. You know, I did it with my matrimonial home when we got married. We did it with our second home, and we haven't been doing it now. But not because we don't need to, but because that gave us the ability to go up quicker.
That's true.
That's the reason why we did it. And it wasn't really a sacrifice on us.
No, it's a smart move in another way, because you actually was focusing on the bigger picture than the small comforts that you were craving for, right? So that's a very smart move that you made. So, based on the topics that we talked about today, I think 2025 is going to be a big year with a lot of exciting things to look for. The most important thing is, whatever the opportunity that anybody is exploring, get the experts' advice, talk to the professionals, look for the legal advice. It can be, or to get that experienced realtor by your side to support you through the process. Or if you're thinking about general investing, not only real estate, have that investment advisor by your side to show you the clear path on, hey, what will be a best option for your money to grow, and the timelines and where to invest, and what not to look for, right? So definitely do your research, explore your opportunities. I know a lot of families that I speak to, even after we've seen this declining rate environment, they're still on the fence. They are like, still, I don't know what to expect. I know, my mortgage is coming to renewal. I'm always doing a fixed rate. Now, everybody is advising me I should go for a variable. I want to, it's nice, the number is nice, but I'm scared what will happen next time. What if it goes up again? So these are the uncertainties that, a lot of people who are thinking. So, but I think just have an open mind. Explore your options, talk to your experts, and understand what opportunities are ahead of you, and if it's at reach, go ahead and grasp it, because these pockets don't happen all the time, because we went through a couple of hard years, and we are now coming to an end of that era, hopefully, as you mentioned in the beginning. So in my opinion, I think there's a lot to look forward for 2025. What do you say?
I agree with everything that you're saying there, and you touched on something that I talk about quite a bit, and it's distinguishing between risk and fear. And risk, it comes down to a number I can calculate. I can mitigate risk. I can work with risk. Fear is something predetermined in my head, that I have something that will make me take action or refuse to take action because of something that is not real, or may be real or may not be real, but you need to validate the fact if it's real or not. So it comes down to what you were saying of, I need certainty. I need 100% certainty that my interest rates are going to stay down. Or if I go in a variable rate, I want to know that it's either going to stay where it is or it's going to get better. It's not going to go up. You're not going to have 100% certainty in anything that you do.
Yeah.
However, I'm an investor. How can I tilt the odds in my favor? That's all you're trying to do. You want to tilt the odds in your favor and have a higher probability of things happening your way, because this is systematic. You want to basically do this on a year in, year out basis. So if I'm looking at what happened in the last 3 years, it's been unprecedented. Can I predict the future? Very hard to do if you just look at the last few years in isolation. However, as we said, a lot of economic indicators are lagging when certain things happen. Interest rates just went down dramatically right now. We're probably going to expect some sort of price action to go up. Can you capitalize on that? Donald Trump just came into power. What happened in the stock market? Those kind of things are, even though they're not 100% certain to happen, they were predictable before they happened.
Yeah.
So put the odds in your favor in terms of variable rate. It goes back to, I'm touching on the mortgage broker here, but it goes back to what you were saying about having a realtor, having a mortgage broker, having an investing professional by your side. Things are different now than they were 20 years ago. They weren't talking about secondary suites back then.
Yes.
They weren't talking about a landscape that may have a different lens you need to look at. One thing we say in within our investment club is, no matter who you have working with you, make sure they're qualified to work with you. If it's a mortgage broker, your friend Jim from high school may be the right guy for you, but does he know about secondary suites? Does he know about the access to capital that you're going to have with getting something that may be 2 units versus 3 or 4 units? It's going to be a whole different process once you get past 4 units.
Yes.
It can be easier for you to actually get capital. So all those things, you need to have the right person in place, rather than a realtor is not just a realtor. And I always use the analogy of, if I'm getting a divorce, I'm going to use a family lawyer. I'm not going to use a corporate lawyer. You want someone that's specialized in terms of what they're working on. So same thing goes for accounting. You want someone that knows how to do accounting for real estate investors. I want to depreciate my asset, for example. A lot of people, they don't do that. All it is a timing thing and deferring tax. So you want to have those right people beside you in order to make those decisions. And I can't stress it enough. You have to have, realtor's a big one. Every realtor, I'm a realtor, for example, and there's within the industry, a lot of realtors come out there and say, I can buy, sell, and invest. But are they putting someone in the right investment vehicle by just saying they can invest? They can purchase that transaction, but if you're a transactionally focused realtor, you're not putting that person in the right investment because there's a lot to look at. Financials, access to secondary suites, how much their income is going to come in, what does that ROI look like?
Yes.
If you want to be an investment realtor, you need to know that rather than just kind of come out and say, hey, I can help you buy an investment property. And if you rely on them and they just want you to purchase that transaction, no problem, that's fine, because they know exactly what they're doing. A lot of new investors, for example, very difficult to do on that, and they put that trust in that realtor. So realtors out there, I basically want to tell you is if you go out there and you want to work with investors, make sure you understand the numbers yourself and you can do the numbers for them, because if they're buying their first investment property, 9 times out of 10, they can't do the numbers themselves. So that gives you the opportunity to be much, much more valuable to them rather than just getting a transaction focus. Because what happens when someone buys an investment property? They're likely, if everything works out correctly, a residential purchaser is probably going to buy a new home every 5 to 10 years. An investor, if something happens that is fantastic for them in the first 2 years, they'd like to want to repeat that process.
Exactly.
And that's what that's happened to me and all the professional investors that I know. You see that and you want to redeploy that capital, and you want to redeploy and you want to continue that down the road. And that's basically the snowball effect, I guess.
Yeah, no, that's great advice that you're sharing there. While you're saying that, a story came to my mind. This is an experience I had with one of my prospects in the recent past. So this was a first-time home buyer. He was on the edge. I've been talking to him for a few months, and he always wanted to buy. He had the money. He was able, he has a pre-approval. He had the money. He had the down payment. He had the closing cost, everything. But he was getting the advice from someone who bought the house 40 years ago, which is his granddad. A lot of things has changed in that 40 years. So when we said get your advice from professionals, get it from professionals. I know that your granddad did bought a house 40 years ago, which is a great investment for him. A lot of cash flow right now for him if he's ended up selling it or anything like that. But a lot of things in the opportunities in the market and the trends has changed. So speak to someone who's up to date with the mortgage industry, in what's out there, in the investment aspect of things, if you're interested in getting your step into investing into real estate or any other avenues as well. So always talk to that expert. I know it's a great source, your family and your circle, but the experts will be able to give you a clear path and a goal setting as to how you can achieve your goals in the near future.
You touched on that perfectly, and it's basically what's happened 20 years ago or even longer than 20 years ago is vastly different today. However, the mentality hasn't changed. If I look back to a common saying today, and many people still use it, a penny saved is a penny earned.
Yeah.
Saving is a losing game right now.
Yes.
And unfortunately, I listen to, and I have 3 kids, and I want to make sure that they're off to a good start. And a lot of kids still, they come out and they start investing or purchasing with their parents' mentality, which was a previous generation. A penny saved is a penny earned is great, fantastic. And put the money under the mattress, I want to save it. Look at our environment right now. Look at interest rates. Look at inflation. A penny saved, you're losing money every year.
That is true.
So it's very difficult for you to have that same mentality and get ahead later on. So you hit it on the head. You need that right professional in front of you, and they're going to help you navigate this market rather than having a mentality of the tools that I had in a previous generation.
That is true. That is true. That is very interesting to see that that mindset. But having the right mindset, having the right focus, and having the experts with you in your team working for you, that's exactly what you need to achieve your goals and be successful in what you do. So 2025, it seems like has a lot in store for us. If there's one thing, Martin, that you would like to share with the viewers today to keep top of mind when you're navigating this this market with these changes coming into effect, what is that one thing or like a best advice that you would like to share with them?
Good question. So, and it's going to be different depending on who you are. So if I'm an investor, for example, I'm going to look at it from a different lens than if I'm buying my first home. But if I'm going to basically come down to one answer for everybody, it's know your goal. And if my goal is home ownership right now, and my goal is a home that I want forever, I'm going to have a different lens than if I'm an investor.
Yes.
So know your goal and match what's available in the market to your goal rather than trying to fit to what someone else is doing. And I've seen too many people say, oh, this person's successful here, I'm going to go and do that there.
Yes.
And it's that shiny object syndrome. And it's basically, you want to know exactly what you got to look for yourself. And I always say within our investment club is, I love the real estate investment because it's not something that I need to change to fit in. I can have a vehicle within there to suit my goals. I can tailor real estate to fit my own personal goals. And that's why for me, I love it. Because as an investor, I just bought a new home for my family a couple years ago. I have a different lens on my hat for each one of those. So coming down to one thing, I can go as an investor. I can say that one thing as an investor right now, it comes down to cash flow. That's your biggest security that you have. Your biggest security is cash flow. I can service this thing every single month. So I know every single month I have a business that I don't have to go into my own pocket for. Now, there's a caveat to that. If someone has a very good job and they have short-term cash flow, goes back to the probability aspect. The market is shifting, the market is turning, interest rates are coming down. So if I'm buying something that's slightly negative cash flow or cash flow neutral, there's a high probability that's going to be cash flow positive in just several months from now.
Yes.
So I may want to do that for the short term. So it comes down to short term and long term and having a bigger picture on there. But ultimately it comes down to, from a sustainable point of view, cash flow. And most real estate investors, professional real estate investors, want the cash flow. Like me having a baby, I want that baby to sustain itself. So I don't have to start working on it as well. So I'd say that's the biggest thing for an investor. And if I'm a residential home buyer, talk to your agent, know exactly, your agent is there to help you. They're there to advise you.
Yes.
So don't make decisions based on a realtor's opinion, but their opinion is not whether if it's going to happen or not happen, it's what's behind that, the economics and all of that. So make conscious decisions that are going to help you in terms of what you're looking for. So if I'm a residential home buyer, then I'm going to be looking at, number one, emotion comes into play. It's my family.
Yes.
It's the roof over my head for my kids. How much can I afford? There's very different lens than cash flow over here.
Yes.
So it's a different lens, but if I put it into one nutshell, it's know your goal and then suit what's out there to match what you're looking for, rather than trying to chase something else. And I spent far too many years chasing.
Yeah, no, I hear you. But no, it's very good advice that you're sharing, Martin. So we are at the end of the year today in 2024. We learned our lessons. We jumped through obstacles. Here we are right now, right? So right now we are actually stronger than before, because now we have more avenues to establish our wealth and look forward for better opportunities in 2024. I think 2024 is going to be a great year, right? And a lot of things to explore, discuss, conversations to have, finding that right partners to partner with in different goals in your life, no matter it can be investment or even going on a vacation, everything comes into play. So I have big hopes for 2025. And what are your main goals for 2025?
I'm excited about 2025.
Yeah.
I think it's one of those ones where, as an investor, we've been crippled for the last 2 or 3 years because it's been hard to find cash flowing properties.
Yes.
And having a negative cash flow, it's hard to attract capital to come in there. So for me personally, we have the investment club that we're ramping up and changing a few things in terms of what we're doing. Now we have 3 arms to our investment club. With the Vaughan Investors Club, which is all about training and education.
Yeah.
We have Vic Realty, which is basically, as you talked about before, have the right people behind you. If you're buying that first investment property, or if you have a number of investment properties and you're going into multifamily, for example, have the right people behind you in terms of being able to do the due diligence, being able to make the right decisions based on what asset that you have. We have Vic Realty, and then we have Vic Capital, which is, we're starting to ramp up again to purchase. We're going to start purchase multifamily buildings, even into individual homes with individual investors as well. Those are called JV partnerships.
Yeah.
If anybody wants to get into the market, I'm excited because I know that opportunity is out there now, and people over the last 2 or 3 years are very tight with their funds. Now they're actually going, hey, is there an opportunity for me to actually use those funds that is, again, predictable and projectable? Can I predict it? Can I project it? Am I very conscious that this is going to be something that's going to happen, or is there a less than 50% chance it's going to happen? I look at things that are going to happen with an 80% probability or higher. That's the decision I want to make.
Yes.
And that's why right now, with the cash flow what they are, in terms of me being able to sustain an asset, I can make those decisions much, much easier than I could in the last 3 years. So I, for one, am very, very excited about what's happening in 2025.
Yeah.
The differences we're doing within our business and the opportunity it's going to give to everybody else.
Amazing. Oh, yeah, I know that's very true. So as we talked, 2024 was a year that we learned a lot of things, saw a lot of things, experienced a lot of things. But 2025 is going to be the year that we are going to change everything and set our goals clearly and achieve them successfully. So if you have further questions that you would like to touch base on what your experience have been in 2024, and if you're looking for that expert to partner with you to give you the best advice, let us know. We are going to leave our link below, and we'll be happy to have those conversations with you and have a successful year together in the 2025 with you all. Thank you, Martin, for joining us today and sharing your valuable insights with us. And we look forward to a prosperous 2025
Thank you.
Together.
It was a pleasure being on the podcast and speaking with you.
Yeah, thank you, Martin.
Thank you for spending your time with us on the Stellar Talk Show. We hope you found value in today's episode and gained insights to help elevate your lifestyle. If you enjoyed the discussion, please like, subscribe, and share it with anyone who could benefit. It means the world to us. Until our next episode, stay inspired, and I'll see you soon on our next Stellar Talk Show.